Opening shot of the newsroom, camera pans to the anchor. Anchor, good morning, viewers. Today, we're diving into the automotive world where General Motors has just announced impressive first quarter results, leading to a significant upward revision in their full-year financial forecasts. GM shares are riding high, up nearly 4% in pre-market trading. Let's break down the numbers and see what's driving the surge. Cut to a detailed graphic of GM's Q1 financial results. Anchor voiceover. Starting with the headline numbers, General Motors reported top-line revenue of $43 billion, a substantial 7% jump from last year, and topping the Bloomberg consensus expectation of $42.09 billion. The company didn't just stop there. It also posted adjusted earnings per share of $2.62, smashing the estimated $2.12 by a wide margin, with adjusted EBIT reaching a robust $3.9 billion. Cut back to Anchor. But it's not just about beating quarterly expectations. GM's forward-looking statements have also generated buzz. The automaker now forecasts its adjusted EBIT for 2024 to be between $12.5 billion and $14.5 billion, up from the previous range of $12 billion to $14 billion. And adjusted earnings per share are expected to hit between $9 and $10, a noticeable lift from the prior $8.50 to $9.50. Switch to footage of GM factories and workers. Anchor voiceover. GM's commitment to enhancing profitability extends beyond its traditional combustion engine vehicles. The company is aggressively scaling up its electric vehicle operations and has projected significant strides in its EV segment. Despite stepping back from an earlier goal to build 400,000 EVs by mid-2024, GM remains optimistic, projecting positive variable profit from its EV business in the second half of 2024. Cut back to Anchor. On the financial health front, GM expects more than $30 billion in automotive adjusted free cash flow for the period spanning 2022 to 2024, underlining their strong operational performance and disciplined capital management. Transition to a graphic on GM's EV sales forecast and market strategy. Anchor voiceover. Looking ahead, GM plans to sell around 200,000 electric vehicles by the end of this year. With EBIT margins in the EV sector expected to improve significantly, GM is setting its sights on a mid-single-digit EBIT margin by 2025, which will be bolstered by the impact of clean energy tax credits. Cut to an interview clip with GM CEO Mary Barra or CFO Paul Jacobson, if available. CFO Paul Jacobson, clip from Media Call, "We're pacing ourselves with the customer, making sure our growth in the EV market is both sustainable and aligned with market demand. Our revised guidance reflects our strong start to the year and our confidence in the ongoing demand strength despite higher interest rates." Cut back to Anchor. GM's resilience and strategic adaptations appear to be paying off. With a 15% compound annual growth rate in sales over the last 2 years, GM is not just navigating a changing automotive landscape, but is actively shaping it. The company's robust start to 2024, coupled with strategic investments in both traditional and electric vehicle technologies, positions it well for continued growth and shareholder value enhancement. Anchor, we'll keep a close eye on General Motors as they accelerate into the future, and we'll bring you all the latest updates right here. For now, let's shift gears and check out what's happening elsewhere in the world of business. Stay with us.